Welcome back to the channel, everyone, and thank you for tuning in to another great video here this weekend. Okay, I wanted to share with you guys a couple of things. First and foremost, imbalances in the market. I've got a couple of DMs or questions about, small little areas of imbalances resting within a supply or demand zone. Okay, sometimes we'll see two candles before the break of or break out through an area of demand or supply. So let's cover that today and talk about that, as well as a little bit about following market structure, because if you're not able to follow structure of the market, you're going to have a hard time taking great high probability supply and demand setups. Okay, and I'll talk about what marks an area of supply or demand high probability is where we have a gap or even an imbalance resting within the area of supply and demand. Okay, now you're going to see gaps no matter what time frame chart, no matter what market, especially when you see aggressive pushes in the market, a great force of where the banks or institutions have stepped in and really caused the market to drive in one direction, and either up or down. Okay, we're not concerned about what's going on when it's sideways, because we know the market's consolidating or ranging, but we're looking for those opportunities where there's great pushes in the market, either to the downside or to the upside, aggressive selling or aggressive buying. Here's a chart of the NASDAQ. It's a 24 range chart. But again, I'm not saying to take trades from the 24 range chart. I like to mark zones from a higher time frame and then look for opportunities on a lower time frame chart. But I just want to show you, because you're going to see supply and demand setups regardless of the time frame, regardless of the chart style. All right. Doesn't matter if you trade time-based charts, tick, volume, range. It doesn't matter. You're going to see supply and demand all over the charts, no matter the market you trade, because it is a universal way to trade. Because really what it's all about is just understanding what's going on behind the closed doors, and the charts don't lie. They show you, their hand when it comes to what the banks or institutions are trying to do. You can see the movement. Do you think it's the retail traders that are making those great pushes in the market? Say this move right here to the downside. You think retail traders stepped in and did that? No, the banks did. They had to fill orders, okay? And they filled them so fast to where there's still money back on the table when price gets back to this area. So as retail traders, we're looking to try to capitalize on those areas where there's money still left on the table from orders they need to fill. So I just want to talk about today and show you. I'm going to show you an example here on the NASDAQ chart of what I'm talking about the imbalance resting at an area of supply and demand, in reference to gaps as well back at a zone. Okay, because it's a little bit different. Okay, in a sense, when we are waiting for price to retrace back to a key area of demand, say for instance, and then we see a little imbalance as well. Lots of times you probably want to wait for price to tap into that area, because look, they have to fill in every area of imbalance resting on a chart, even back at a supply demand zone. Okay, it's going to happen. It has to happen. It's just a matter of time. We don't know exactly when, but we just wait for those opportunities. Trading, understanding market structure and looking at what's going on with price action. Okay, so what I want to show you is that we have the market running to the upside. And what day is this? This is on October the 4th. So today is the 7th. So that was yesterday was the 6th. So that was Wednesday, right? So what we have here is the market moving to the upside, making higher highs and higher lows. And you have to understand the market can shift and start to break structure back to the downside, to which at that point we're going to start looking for opportunities to take shorts. Okay, now what I like to talk about and here on the channel is, and for in the sake of for new beginner traders, is to follow in the higher time frame direction. Okay, so if that higher time frame, if it's a 60-minute chart, I'll look at a 60 range chart. If it's a 4-hour chart, you look at whatever it is. Trade in the direction of what's going on in the higher time frame, meaning catch your setups on the lower time frame based on the overall direction of the higher time frame. All right, so if you take a look here, what took place here, all market structure is price making higher highs and higher lows. Okay, in this case here, we're making higher highs and higher lows before the market shifts direction back to the downside, and then it starts to make lower lows and lower highs, breaking structure to the left hand side here as it's making lower lows and lower highs to the downside. So now we are, mind shifted from bullish to bearish now, looking for short entries. Okay, and then the market may turn back around and do the opposite, go back up. Okay, But what I want to show you here is that it started off making making higher highs and higher lows. Then it shifts, making lower lows and lower highs, and then we get another shift, okay, to the market. So once the market makes a move like this and then pulls back, we're interested, is the market going to push higher, okay, and then make and break above this area here at 834, okay? That's going to be an area where price could break structure back to the upside. But what it does is it makes lower lows and lower highs, and I just want to show you this as examples, okay? We're not going to wait for price to solely or truly break back to the upside and start to look for an opportunity to or a retracement back to a demand zone. We got setups in between, okay? Now, I don't like to trade in the middle of things as a leg, is actually taking place, and then it may turn back around, push to the upside. But, in this case here, price making higher highs and higher lows, and then it starts to make lower lows and lower highs, just like I said, okay? So we had a low here, and then a high here, and then a low here, right? But look what happens when price turns around, okay? It turns around, pushes up, makes a high. Higher low, break structure right here. Haven't fully taken out this complete swing, but this is an internal structure break back to the upside here, okay? Now, what makes let's talk about this. The high that broke structure right here, okay, and then the pullback right here, a lower high and then a higher high. Once we get a high that breaks structure, then a pullback, what makes a lower high, and then what makes this lower high valid for an opportunity to look for a pullback to the zone is when we make the higher high, okay? Meaning price breaks higher, breaks structure right here above 769, so it broke internal structure here, okay, right? As it pushed right here, makes a lower high, and then finally breaks above, taking out this high right here at 77.5 and a half. All right, now we got a new high, right? This makes this lower high a valid point of interest, especially when we have, a green candle, green candle, green candle, green candle. That marks an area of demand, right? So we would wait for typically a pullback. Excuse me, guys. Give me 1 second. A pullback to this area right here. Okay, we can mark this demand zone right here. All right, but there's also another area of demand resting below, which is in this area here. Now, here's the thing. A lot of you would say, okay, well, when price pushed higher here and broke structure right here, as it made a new high here, okay, and then it pulled back, it made a lower high, and okay, it already tapped into what we would classify as a demand zone, right? It did. It filled the gap back to the demand area. But pay close attention to what also is within the demand zone, okay, when price made this lower high here, okay, before it made a new high, which made this which made this lower high now a valid area to take a look at as an area of interest. What happens is you see this little gap, right, this little imbalance resting right here. Let me blow this up for you. Take a look. There's an imbalance. This candle here that pushed to the upside, this bullish candle that formed, okay? And then the next push to the upside right here, okay? And then the very next candle that broke above, taking out or breaking through this above this red bearish candle right here. All right, so where the move actually started at, okay, originally, all right, even though we mark our demand zone from the top end of the wick of that red candle to the bottom end of the wick of this green candle, that's we draw out the demand zone like that, right? Price pulls back, it taps into the demand zone, but there's still, because we have multiple candles sitting back in the demand zone, one taking, shooting up right after the other. Push up here, bullish candle. Another push up here, bullish candle. Another push up here, bullish candle. So we got 1, 2, 3 bullish candles. That third candle right there that formed, say to the upside, look, it left a gap right here. All right. So take a look. Right here to right here. So we have a gap within the actual area of demand in this case right here. See that right there? Price has got to fill that area. There's gaps in between the candles, okay? Where the candles, as they form to the upside, creating an area of demand, all right? Price didn't come back to, the top end of one candle as it pulled back, okay? So it broke higher here, formed another candle, it didn't come back, formed another candle, it didn't come all the way back as this last third candle formed right here, the wick of it didn't come all the way back down here and fill in that gapped area right there. So price has to fill that area at some point. Even though, again, Once it broke structure right here to the upside and it pulled back, okay, it pulled back to the demand zone and took off. It didn't come back even then and fill this gap here. So we have a gap in the middle, or gap back inside of the demand zone. So pay close attention to things that happen, okay? I want to show you this because there were multiple candles. There were two candles that formed inside of the demand zone before price broke higher and broke structure here, okay? So it left a gap inside the demand zone again. All right, so price comes back to the area. What do you think is going to happen? It's going to, if it rejects that area there, we'll look for a break of a candle in the opposite direction, meaning full close of a candle in the opposite direction, and then price takes off to the upside. And because we have interest with price, once it made this lower high here and a new high here, pulls back, you can look for price to form and almost bet that it's going to make a new high, okay? Because it already made a new high here before it pulls back, fills the gap, resting inside the demand zone, and then it takes off to the upside, making a new high, all right? All right, so that's a demand zone setup right there. I want to show you a supply area here in the same area of reference right here, okay? So play close attention. But the difference here is I want to show you is that we don't have multiple candles that form inside the area of supply like we did in demand, okay? But it can happen in the supply zone too. I just want to show you that there was not an area of primarily a gap in between candles because there was multiple candles formed inside the zone. All right, so price makes that new high right there, right? Then it turns around, all right? It turns around, and then it starts to break structure back to the downside. How and why? Because it broke below this area here at 757 and 3/4. So we got a break of structure below that area there, okay? So we can look for, key areas of supply back, to, within the area where price broke structure at, okay, as it was moving back to the downside. So if you look at this, I'm going to show you this right quick. I'm going to draw it out. Price made a high here, made a higher low, and then a new high here, right? Well, there's some internal structure within this swing to the upside. We're talking about this area right here. The moment price breaks below the first push, we're not interested. It just made a low there, right? We're interested in looking for a supply area once we see a complete structural break to the downside, meaning a new low and followed up with a lower high, followed up with a new low, meaning price forming a full swing to the downside, breaking through an area of structure. So we get the push to the downside, breaking internal structure below 73. Pulls back, makes a low here, lower high, and then we get that push to the downside, right? So if you pay close attention, we have a supply area marked right here. Now, I'm going to erase these arrows here because hopefully you see now the break of structure, okay? All right, let's do this. So at this point, we can go ahead and mark our supply zone. We got the break of structure, a low, lower high, followed up with a lower high, followed up with a new low, and makes this lower high valid, guys. Sorry, not invalid, valid now, okay? All right, because we got a break of structure below this internal structure right here, okay? And ultimately, we got a complete break of structure to the downside because we broke through this major area 78 and a quarter. Excuse me, not 78, 58 and a quarter, okay? So anyways, we marked the supply zone right here, right? Now, you saw within this demand zone, what did you have? The difference is we have two candles that form, all right, right here within the demand zone. Here we don't have that situation here, okay? So we only have one candle that formed within the zone, okay, right here. See that? One bullish candle to the downside and then the break below, okay? Here we got one bearish candle to the downside and then the break below. Here we got one bullish candle to the upside, another bullish candle to the upside within the zone for the break above, okay? So two candles here, one candle here. So when we mark this supply zone right here, all right, primarily we're just waiting for price to pull back and fill the gap, okay, which is going to be from the bottom end of the, let me show you, this bearish, that bearish candle, that green candle. Hopefully you can see that line there. I'll move it down below an arrow so you can understand. Actually, let's just go ahead and we'll mark the line so you can see it. I'll mark it hot pink. Okay, hopefully you can see that line there. The bottom end of that green candle, okay? So one, got the break, the very next candle after the break. So we got the break here with this bearish candle to the downside that broke below that green candle. And then the very next candle right here that formed, okay? All right, after the break there, okay? So we'll mark that candle there too. And we're marking the top end of it because If you look after we got the break, the next candle that formed to the downside, look how far it pulled back. It is pulled back right here. Now sometimes it may pull back up here, and you still have a small gap. In this case here, we got, that's the area there. So let's mark this as, I guess we can just do pink as well. Doesn't really matter. Can be any color. All right. Anyways, so pink. Okay, so we got a gap there. You see that? But there's no gap within inside of the supply area there. So I'm just showing you the difference. Sometimes you'll see two candles before the break, you know, to the downside within the supply area. It doesn't really matter, supply or demand. It's just, I'm just showing you as an example that there could still be an area of a gap inside of a demand or supply zone where price could pull back to, and you want to wait for price to pull back to that area, you know, like it pulled back here, all right, when it made this lower high right here, it tapped into the area of demand here and took off. But still, when price comes back here, you know, a lot of people will think that, nah, the zone is invalid because of the fact is it's already tapped right here to the zone, you know, to the demand area. No, there's actually a gap inside of the demand zone in this case here. And there could have been a gap inside the supply zone. That's what I'm trying to explain. So wait for price to come back to those areas and see if you get the rejection, okay? Even once after, you know, the market is already tapped back into the area of demand one time, it could come back and fill this gap here because it still has to fill that gap at some point. All right. So in this case here, price pulls back to this area of supply here. Okay. All right. It fills this gap right here, the outlying gap when price broke to the downside after it made this lower high here and it broke lower. Okay. Making this a valid, now a valid breaker structure to the downside. All right. It fills in that gap back to the supply zone there. You look for the rejection, break of the candle, full candle close in the opposite direction, and what we're going to take price back down to. We're going to take price back down. First area of business, back down to this area right here. Okay, all right, there's aggressive buying right here to the upside. There's demand interest right there, okay? But also be very mindful that price, when you see a situation like this, when you get a rejection off an area of supply, already size up your areas where you can take profit at. Profit can be taken here, your first couple of contracts. So let's say you got in, aggressive. Let's just say you got in aggressive, right? We got in right here at 70, all right? All right, most of us will wait for the, if you're conservative, the break right here, maybe here at 68 and 3/4, let's say, okay? Somewhere in between that area there. Okay, price breaks below. You don't have too much area to really trade from back down to the downside. Back down to this area right here, which would be 62, but that's 5 or 6 points here on the NASDAQ. Okay, this is off the 24 range chart, but you'll see setups like this that happen on even lower time frame charts. And most times I'll take my entries off of a 12 range chart. Okay, I don't primarily go any lower than 12 range on the NASDAQ. Okay, but maybe your first couple contracts you take off right here. Also pay close attention to where you have an area where there's a gap back down here below, okay? Below this area right here of demand right here, there's also a gap back down below here. So if I saw that I was going, this setup right here at an area of supply, I saw that there may be a small area of demand right here, but I also see a gap back below it. I'm going to aim for that as well. I may take a contract or two off here and then aim for this area here as a runner, okay? Back down and to fill this gap in between right here. Very small gap. I'm going to show it to you. All right, I'm just going to use blue lines or blue arrows to show you this. This candle here, the next candle that took out above, the third candle, okay? So the bottom end of this wick right here, okay, to the top end of this candle right here. All right, that candle there took off to the upside. Next candle closed above it. Third candle, did it come back and close or tap back into the top end of this bullish candle here? No, it did not. It's left a small gap there. Price has got to fill that gap, okay? So when it rejects this area here, again, maybe take it back down to this area of demand sitting right here. Okay, first couple contracts take off, maybe leave a runner to come back down here and fill in this gap area right here back down to 751. All right, so if you got in at say 70, you were good for almost 19 points, say for instance. Okay, if you got in at 68, maybe you got in here at 66, you know, 67 area, whatever the case is, you still got a decent area to trade from to pick up maybe 4 or 5 points here and let the last contract run. I just wanted to show you guys that price has got to fill in those areas or gaps that it leaves, all right? Even if it's a gap that's left behind at an area of supply or demand. In the area of supply and demand, in this case here, we have a gap that was left behind right here within the demand zone. And this just as well could have happened at this area of supply if there were multiple candles that formed within that area of supply. In this case here, it was just one candle before the break to the downside. So make sure to pay close attention to those small areas and gaps, because price has got to fill those areas, especially if you got a setup either at a supply or demand area and you see a gap. All right. So again, this example right here, price comes back, fills the gap here at demand, right? All right. So what we're going to aim for? We're going to aim for back up to the high right here, okay, and above that area, because like I said, we have price when it made this lower high here, okay, and then it closed above, made a new high. That's giving us indication that price is trying to really push higher. It just wants to pull back to a key area, to a demand zone. And in this case here, filled the gap there and took off and made a new high here. So look for opportunities like that within your trading is all I'm saying. But I just want to show you guys that today, kind of really zoom in on and really clarify more in detail about those key areas, those gaps, guys. You got to understand they are the most powerful thing to what makes a trade setup an area or zone and high probability area. So pay close attention to, because the market has got to fill those gaps when it gets back to those key areas or key zones, okay? If you're interested in joining the Discord, okay, and seeing more setups like this or more examples from multiple traders, okay, join our Discord community. Click on and find the link down in the description portion of the video. Come over and join us on the trading floor channel within the Discord server. To where on during the US session, the New York session, we are posting entries, screenshots of our trades. You know, lots of times I'll give out or just post out there, throw out there areas of interest or zones I'm looking at, whatever the case is. So highly recommend you come over. The Discord community is growing by the day. We've got a community filled of like-minded traders that are just having positive energy and shared information across the platform, okay? So come over and join us. Find that link down in the description portion of this video. But how are you going to help yourself? You can help yourself by clicking on that subscribe button down below, all right? I highly recommend you do so, okay guys, because I'm giving away lots of free information, lots of wisdom, lots of knowledge, just passing things forward, okay? I want to see people do the same, you know? If you know something that could help others, pass it forward. That's what it's about in life, so that's why I'm doing this and making these videos. If you see I have like 600 videos, lots of traders would say, or people in the community would say, man, you know, at some point the channel is going to take off. You know, I'm not worried so much about that, but it'd be a blessing if it does, because I'll be able to reach more people. That's the end all goal. But at the same time, the community that we currently have, that we're slowly building, I'm thankful for every one of you members that are there and that are part of the community. So click on that sub button. You have nothing to lose, everything to gain. As well, make sure to turn on all your post notifications so you never miss one of the uploads here on the channel. And last but not least, drop a like on the video. I greatly appreciate it. That will allow the algorithm, that will allow the channel to continue to grow. Excuse me, guys, a little tongue twisted there. And that way we can get the information that I'm sharing to the masses of people out there. Thank you again for taking the time to watch today's video, even on your downtime throughout the weekend. All right, I know most of you may be, you know, out and about. Maybe you're just getting home. Maybe you're spending time with your family. But I know there's so many of you out there that are interested and passionate about trading, so I had to push out and pump out this material today. Take care. I'll see you in the next video.